Hey, what's up, hodlers? Let's talk about what's happening in crypto world today. So, ETH seems to be really outperforming. It's trading in the mid 2,300 US dollar range, so quite well done. Whereas Bitcoin's still trading just under the $40,000 mark. And although in terms of pricing, it doesn't look like a lot has happened, there's quite a bit of activity happening, especially on the exchanges at the moment. So the headline says massive outflows see Bitcoin exchange balances plummet to 2018 levels. What does that mean? So essentially, it's a company called Glassnode, and what they do is they look at the on-chain, so the blockchain analytics, and they look at all different types of transactions happening on wallets on the network. And in particular, here they're looking at exchange wallets. So these are wallets that belong to platforms like Binance or BlockFi or Coinbase or KuCoin or any one of these exchanges, and they're looking at what's flowing in and what's flowing out. Now, there's two types of different wallets on these exchanges. You have the hot wallets, which are ready to make trades and transact, and they have the cold wallets, which are more meant for storage and safekeeping. And so what they're saying here, that there's two massive outflows during the last 24 hours. So there's one in the worth of 23,530 Bitcoin, and another one shortly after, about a half hour after that one, which ensued, which was for another 40,000 Bitcoin. So a total of around 63,000 Bitcoins were taken off of the hot wallets and put into cold storage, according to this data analytics, which is usually a very bullish sign, because it means that people are taking their Bitcoin off of the exchanges. They're not thinking of trading them, but rather they're more focused on safekeeping. So here you can see it even better. So at Glassnode is aggregating all of the balances on various different exchanges, and you can see here, for example, that starting back in January, as the balances held on the exchange, they dropped, meaning a bullish sign that coincided with a rise in price. And then obviously in the May crash, where Bitcoin fell from its all-time high of 64,000 down to the 30,000 range, that coincided with a huge lift in the balances held on exchanges. So it shot up all the way to just over 2.6 million Bitcoin held on exchanges, and it's held pretty constant. But now what's interesting, just in the last few hours and days, you can see that there's been a massive plunge again, as said, probably because of these 50,000 Bitcoins leaving exchanges, amongst others. And that's potentially a very bullish sign and could mean that there's going to be another boost in price. So that was the pricing news. In terms of adoption news, there's some developments coming from Mastercard, whose CEO, Michael Miebach, is quoted as saying that what we believe we do is bring a perspective to the market as a multi-rail payment provider. What we have to be in this space, because meaning the crypto space, because people are looking for answers. Now that's not very surprising. You have PayPal and Visa having already made headway in the space, so it's only logical now that Mastercard is trying to catch up. Then finally, in some more bearish news, you have the International Monetary Fund, the IMF, stirring up some FUD. They're jumping in with some warnings about Bitcoin and crypto assets posing substantial risks to macro financial stability. Now, this comes on the heels of El Salvador making Bitcoin legal tender, and you have the IMF jumping in and saying that adopting Bitcoin or other cryptocurrencies as national currency is, in quotes, a step too far that can negatively impact a country's economic stability and financial integrity. Now, they give two reasons in particular for this. One of them is, and I'm quoting, if goods and services were priced in both a real currency and a crypto asset, households and businesses would spend significant amounts of time and resources choosing which money to hold as opposed to engaging in productive activities. So they're saying people would waste a lot of time going like dollars, Bitcoin. The other reason they gave is that also monetary policy would lose its bite. Central banks cannot set interest rates on a foreign currency. Usually when a country adopts a foreign currency, as is the case with a lot of South and Central American countries like El Salvador that are fully dollarized, when such countries do this, they import the credibility of the foreign monetary policy and hope to bring its economy and interest rates in line with the foreign business cycle. And they go on to say that neither of these is a possibility in the case of widespread crypto asset adoption. So here, and I think out of the two reasons, this is probably the more serious one for them. They're bemoaning the fact that they would, with Bitcoin, they would no longer be able to set their own monetary and inflation policy. So the inflation policy, in particular with Bitcoin, it's fully automized. You can't come in and say, okay, now it's going to be 2% or 4%. So you don't have any wiggle room there, and they're saying that would be a problem potentially. So that's it for me. Thank you everyone for watching, and see you next time. Bye bye.